Hello and welcome to this edition of Africa This Week, your wrap of what happened across the continent. I'm Mashudu Masuta. In this part of the program, we review the Indian presidential visit to South Africa, a summit to review investment in Millennium Development Goals, as well as the latest report on FDI inflows in Africa. Indian President Pratibha Patil visited South Africa this week. She was accompanied by a delegation of Indian business leaders. The visit sought to strengthen the two countries' social, economic and cultural ties. Tumisho Makhanyele was there.
Indian President Pratibha Patil has reaffirmed the country's commitment to working with South Africa in the monitoring and implementation of current agreements regarding science and technology, renewable energy and infrastructure.
Not only do we share the history against colonialism, racism and tyranny, but we also share a commitment to democracy, to respecting the rule of law, to promoting global peace and security, social justice, and waging a war on poverty and unemployment.
The South African government has also extended an invitation to the Asian nation to invest in its infrastructure development program, which will last until 2014, with an investment of more than 800 billion rand. 300 will go to the energy sector and 262 billion to transport and logistics projects.
Any kind of collaboration internationally in terms of our national infrastructure development program is going to be beneficial for South Africa. Obviously, we have the opportunity then to get the benefit of whatever skills base exists in the Indian environment, and we are aware of many areas of competence that our Indian counterparts have got.
Bilateral trade between the two countries amounted to almost 54 billion rand in 2011, with Indian imports accounting for more than half the amount. This is expected to double by 2014 to 111 billion rand.
Both South African government and the Indian government are attach a high degree of priority to creating the enabling environment. We are on course to achieve the target of $15 billion by 2014. In fact, I'm very confident that we would do it before the target date.
Despite strengthening economic ties, the two countries are also forming political bonds. India and South Africa are working together for the development of the Gandhi Heritage Site here at the Constitutional Hill in Johannesburg. This will be in remembrance of Gandhi's historical influence to South Africa.
The rich history and the relationship shared by both India and South Africa is one that will continue to grow and blossom across the ages as our bond continues to be passed on from one generation to another. This past symbolizes our decisive break from any form of racial, economic, gender, and religious discrimination.
Both India and South Africa share deep social, cultural and economic ties, which can translate into meaningful socio-economic development cooperation. And with clear goals set by both countries, the trade links should continue to serve the countries well going forward. Tumisho Makhanyele, Johannesburg.
The MDG Review and Summit 2012 got underway in Cape Town, South Africa this week. We discussed investment in MDG challenges with Professor Gerhard Coetzee, head of the inclusive banking segment at ABSA South Africa, who delivered a paper on the subject at the event.
A good understanding by the banking sector of the low income and poor market in South Africa would help us to offer services that will really be not only accessed but used by poor and low income people, and in that way the banking sector can play a massive role.
What is that role? I wanted to get a little bit into the role that you and how it can meet those MDGs.
Well, access to financial services quite often is not directly linked to the MDGs, and you have to link it through income generation and then empowerment of the poor to really address some of the challenges they have in terms of health and education, etc. So access to financial services means that you have ability to increase your income, and it's a very simple thing. I mean, if you think about people that now have the ability to send money, to transact on a daily basis using a bank account, to access financial services far more conveniently and less costly to them. Those are the kind of things we are chatting about.
Let's talk a little bit about sending that money. I mean, you were telling me before that research is showing that remittances in and out of Africa are now outweighing foreign aid onto the continent, and that is quite significant. Talk to us about that and how that's changing the landscape on the continent.
Well, I think what happened over the past few years is that the remittances from outside the continent to the continent helped for a lot of survival of people, but also for investment in businesses, for expanding economic horizons. I specifically noted a while ago that a report said in 2005 that just from South Africa to our neighbors, there's a send of about 6 billion rand per year, and just a recent report in 2011 upped that to 9 billion a year. And you can think about the positive impact the flow of money into the neighboring areas must have for our counterparts and our citizens over there.
Let's talk about the M-Pesa model in Kenya. That has been praised, and this is a model that has worked so well for the particular target of people that you're speaking about. And you were saying that it's been difficult to replicate a model like that here in South Africa and in a country like South Africa. Why is that?
Well, I often say the M-Pesa model has a halo effect because it's so successful. And most people then expect that wherever you bring the same model, it should have the same success. But what is important to note is that in Kenya, the company that provides the mobile phone service there, Safaricom, already had 80% market share. So a lot of people were already provided the service, the mobile service by this company. So that was like a captive market. Also, in Kenya, the financial services institutions and their outreach is concentrated in the main areas, mostly around Nairobi, which means there is a heavy requirement for remittance services, which in the past was with informal send and receive at a high cost. And M-Pesa empowered people to send and receive money at far more conveniently, far more securely. Now, if you come to South Africa, you will find that there's a far bigger reach of financial services formal points nearer to people. We already had the Financial Services Charter that indicated in 2008 that 76% of the people in the country are within a few kilometers of financial service points.
Foreign direct investments into Africa have more than doubled from 339 projects in 2003 to 857 in 2011. Ajin Sita, CEO of Ernst & Young Africa, reviewed Africa's growing attraction as an investment destination.
We've been tracking the trends of foreign direct investment since last year in our inaugural survey. And this year we've seen that there's been a growth from 4.5% to 5.5% of global FDI projects actually in Africa. So there's been growth. But it's still well below what equivalent places like China or India are getting. So our view is that Africa is still not getting its fair share of global FDI.
Before you go further, how does the survey work? Just so we know where this is coming from and who contributes to it and what the measures are.
So what we've done is really speak to 500 investors from around the world. These would be chief financial officers, CEOs of large companies who have investments around the world, including on the African continent themselves. So these are the people that move the markets.
Right. Okay. Look at the trends now in terms of money. You talk about the number of deals now, presumably, or investments. That would be small deals and big ones. What sort of money are we talking here?
Well, our expectation is that over a period of years, up to 2015, Africa should attract about $150 billion of foreign direct investment on an annual basis. Now, that's a critical number that Africa is tracking towards. But the reality is, when you talk about capital, from 2010 to 2011, FDI capital is actually reduced, but projects have increased. This is a trend around the world. It's really a lingering reaction of the financial crisis. What's interesting, though, is despite the drop in capital, the level of projects in Africa, no doubt, have grown. It's grown by 27% on a year-on-year basis. Now, the key message out of that is that we're seeing far larger number of smaller projects which is going into diversification of the economy across Africa. So far greater investments into the services sector, construction, financial services, away from the obvious natural resources.
Africa's a big place. It can't be evenly distributed. So where do you find most interest is?
Well, there's no doubt that when you look at it, South Africa continues to attract the lion's share of foreign direct investment. In fact, if you took the 54 countries in Africa, about 15 countries make up 85% of all foreign direct investment, or that's provide the home for foreign direct investment. The big markets are South Africa, Nigeria, Kenya. What's interesting though is that looking at investments into Africa, South Africa actually ranks number 6 in the world of intra-Africa foreign direct investment. So it continues to play a leading role in driving investment in the continent.
That's interesting. We think there's not enough investment in South Africa and we need much more, but your survey suggesting it's still substantial.
Well, to your earlier point about looking at the continent, the reality is it's a patchwork of 54 countries, and this makes it a complex investment proposition for global investors. What Africa needs is greater regional economic hubs. So our survey really points out 2 areas: greater regional economic communities and greater investment in infrastructure. The most exciting news, I think, is the commitment by 26 member states in Africa to form this Pan-African tripartite free trade zone, which is a market of about 600 million people, $1 trillion in GDP. The only markets bigger than that would be China and India in population terms. Well, now that's exciting.
Let's talk about that. And you do say that China and India are attracting much more. What are the factors that, I mean, you might have negative factors where people see huge risk in a place, but you might have a lack of positive factors. In other words, they just don't know enough about it. Whereas India and China, you'd think that for other investors from other places, they would also be ignorance or a hesitancy. But it appears that Africa needs to do more to sell itself.
I think you're absolutely right there. In fact, what we looked at is there was a marked difference between people who are already invested in Africa and their view of the continent and people who are not. In fact, people who have a business presence in Africa rank Africa ahead of all places in the world, all regions in the world, in terms of market attractiveness, bar Asia, and by a small margin only. For those people who don't have a business on the continent, in fact rank Africa dead last. So there's a massive perception gap, and that perceptions are really influenced by views around political stability, corruption, ease of doing business. What we did also is try to understand why is that so? What, is there fact that supports some of these perceptions? And there's no doubt if you look at levels of progress, let's take political stability. If you go back to the 90s, to today, in a 20-year period, the level of democracy or democratization across Africa has grown exponentially. In fact, in 1990...
There are questions though about how genuine it is. Well, elections which are held which perhaps are not real.
Well, in 1990, up to that point, we only had one successful democratic handover of power. Post that, we've had many democratic elections, but we've had 30 power handovers in that period. We've had an election in Nigeria. You've had a successful transition in Zambia. The reality is there's been gains, but that story is not being told. If we look at the ease of doing business, perhaps, and that's another factor that has come up.
After the break, more stories making headlines this week.